Hello and welcome to Blindway Business News. Today I'm joined by Keith Coughlan. Keith's the Executive Chairman of European Metals Holdings. European Metals Holdings is developing Europe's largest hard rock lithium project in the Czech Republic. Keith, hello. Now you're joining us today. I have some very exciting news you've just released. European Metals has gone into a financing arrangement with EIT InnoEnergy, which I understand is part of the European Union or is funded by the European Union, a financing arrangement. Tell us a bit more about it. Tell us why EIT has got involved and give us some details about how it's going to progress the project.
Sure, Tim. Well, firstly, hi. Thanks for having me on board. I wouldn't call it actually a financing arrangement. It's a collaborative agreement to help progress the Synovex project through to commercialisation. And one arm of it is certainly assisting us with ongoing financing at the next stage of development of the project. Fortunately, happily, we are fully funded right now through to decision to construct. And from a financing point of view, that's where we may see EIT's involvement reach fruition. Who are they? Well, as you said, they are part of the EU. They're part of the European Battery Alliance, and in fact, they lead the Battery Alliance. If you like, they are a commercialisation go-between the European Battery Alliance and business in Europe. So obviously, the EU is a massive organisation. The EBA is a very big organisation as well. And EIT is there to help focus the aims, the stated aims and policies of the EU to make things really happen at a business level.
So as we were saying, I think the last time you were on, Keith, a few weeks ago, where you're located, where the mine's located in the Czech Republic, you're very, very close to the big manufacturers in Europe of electric vehicles. So having this EU body behind you is really, it's the EU recognising the benefits you're going to bring to batteries and to EVs. Is that what we're saying?
That's right, Tim. If you look at it from the macro down to where we are, obviously we all saw the announcement from the EU last week of the establishment of effectively the largest green stimulus fund in history, 500 billion euros, committed to help rebuilding EU business with a very distinct focus on green energy going forward. So there is a big stated policy aim at the EU level, a very big commitment to that goal. And obviously we need to see how that policy can turn into real business trickling down. And that's the trick effectively. So the EU through the EIT is there to connect the various players in this, what is relatively new industry, the battery industry within Europe. So there is a full commitment to this battery industry. The battery industry is being driven by the EV industry, and the EV industry, particularly in the EU, is facing potential shortages of raw materials in 3 or 4 or 5 years' time when these EV manufacturers start to hit production numbers that they've all been talking about. So, for example, if Volkswagen is to produce 3 million pure EVs in 2025, as they've stated, they need significantly more lithium than is available in the world today. And what the EIT is doing is bridging that gap between projects at our level of development and the requirement for real product in 3 or 4 or 5 years' time. And it's great to see that that's been recognised. You have a situation where the automotive industry is a very big, established industry with a long history. Its supply chains, they're set, they're scaled, and they're very big. At the other end of the scale, the battery industry is still very much in its infancy in many ways. Only a year or two ago, the battery industry supply chain was there to cater for manufacturing batteries for laptops and cell phones. And clearly the battery industry is being asked to step up significantly over the next period of time to meet the demands that are going to come from the EV industry. So there's no point in the EU setting policies about driving EVs, building infrastructure for EVs, governments making policies about not being able to drive internal combustion engine cars after 2025 or 2030, depending upon which country you're talking about. It's no good making statements like that if you can't provide the supply of the raw materials to build the batteries to put in the EVs that consumers are going to want to be driving at that period of time.
So EIT is coming in then, EU backing to take this embryonic industry, really help you commercialize it.
Absolutely, absolutely. And with a renewed focus on local supply chains. What's happened partially as a result, largely as a result of COVID-19, is the realization that relying on global supply chains for batteries and EVs and raw materials has got some concerns, some serious concerns. And the EU is obviously working out that they need to develop their own supply chains wherever possible. If you control local supply chains, you control many aspects of the project. You have mineral security to begin with. You create jobs within your own region. You have some control over your costs. The automotive industry is a very competitive business with very low margins. So if you're an automotive manufacturer who's wanting to make a significant number of EVs and you don't have some control over your supply chains, you're going to be in trouble.
So European Metals is sitting there saying to people like BMW, Mercedes, Volkswagen, if you want lithium for Europe, from Europe, European Metals, we're right on the doorstep. Very short supply chains.
Well, that's correct, and it's a very large deposit, so that's important from the point of view of long-term security of supply. With our production profile, we could be delivering battery-grade lithium products into the EU for 50 to 100 years if required. Or ideally, we'd like to increase that level of supply, level of production, obviously with the right sort of backing.
So EIT have come in to help you commercialise. You've also got another project partner there in the Czech Republic. They've also got a focus on green solutions. Tell us a bit more about them and their involvement in the project.
Certainly. So that's CEZ, the Czech power utility. It's a large publicly listed company, but it is approximately 70% owned by the Czech government. So effectively, the Czech government has a strong involvement in this project. Now, ČEZ came into the project about 4 months ago. They paid just under 30 million euros for 51% of the project at a project level. And that money is very important to us because that funds our project now through to decision to construct. Funds us right through bankable to the stage where the sort of people that EIT will introduce us to will be comfortable to be putting up a portion each of the $500 million that we forecast we'll need at that point in time to build the mine and the processing plant. So the ČEZ involvement has been very important. That's from a financial point of view. It's also very important within the country. ČEZ has operated in the Czech Republic for many years. They know how to permit mines. They know how to permit the processing plant and all the various other aspects and infrastructure that we'll require. So they're a very important partner. Bringing ČEZ in effectively de-risked the project to a large degree. Bringing the EIT in de-risks it further. And, I would say that the likelihood of Synovics going to production has now been increased dramatically.
Okay. Every time we talk, Keith, you're making more and more forward steps towards this thing becoming absolutely reality. I was looking at the share price, which seems to be a steady upward trend since April. And yesterday, when you announced the support of EIT, I think it reacted very, very well. You must be pleased with that. I'm sure you're hoping there's more to come. So what should viewers be looking for in the coming weeks and months in terms of news flow?
Okay, well, firstly, with regards to the share price, yes, it has reacted as one would expect. As I say, it's not only a matter of us improving the project at every step by de-risking and bringing the right sort of people to the table, but obviously the macro is very, very much in our favour. We're getting very good tailwinds within the EU, politically and financially. In terms of where we go from here, we will be into the formal part of the definitive feasibility study very soon. The various other studies, engineering studies that go along with that. There'll be further drilling, and all of those things obviously will bring to the market as and when they occur. But above and beyond that, the involvement now of two very, very serious financial and political partners puts us in a much stronger position to increase the level of discussion that we're having with strategic partners and potential off-takers. And that's really where we want to go in the short term.
That was Keith Coughlan, chairman of European Metals Holdings. European Metals Holdings, as we heard, are developing the largest hard rock lithium project in Europe. They're right on the doorstep there of the big vehicle manufacturers. So as we say, it's lithium for Europe, from Europe. European Metals trades on the AIM market with the ticker EMH, and the market capitalization is currently around £28.5 million. That's it from Blytheway Business News for today. Thank you for watching.